Hey everyone, Dell Technologies is scheduled to report fiscal year 2025 second quarter financial results after the markets close on August 29th. Dell is in its fiscal year 2025, even though we're in calendar year 2024. Publicly traded companies are allowed to have these differences in terms of fiscal year and calendar year. In this video, I'll preview what investors can look for from Dell when it reports their quarterly earnings, and I'll update and answer if I think investors should buy Dell stock before the company announces its earnings. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. In their latest quarterly update, which consisted of the quarter which ended on May 3rd, Dell reported net revenue growth of 6%, with operating income falling by 14%. Dell Technologies has not grown its revenue as quickly as one of its rivals, Supermicro, and Supermicro reported quarterly financial results a couple of days ago, which demonstrated significant, robust growth of upwards of 100% year over year. That's because Supermicro doesn't have the client computing segment like Dell Technologies has, where it sells personal computers. Supermicro is specifically focused on the data center, and the data center business is growing. One part of Dell's business is the data center, so let's get into the specifics between the segment breakdown of Dell Technologies. So starting with its Infrastructure Solutions Group, which delivered first quarter revenue of $9.2 billion, that was up 22% year over year. Servers and networking revenue came in at a record $5.5 billion, which was up 42%, with demand strength across AI and traditional servers. So this is the segment that houses the AI server, and more specifically, the AI server is the segment with the most growth. Traditional servers are not growing as quickly. In fact, they're relatively flat from what I've seen across various providers. But the AI server is growing very quickly. That's the category where Dell Technologies stands to benefit, and that's the segment where Dell will report the greatest growth in the upcoming quarter. The Client Solutions Group delivered first quarter revenue of $12 billion, which was flat year over year. And as you'll notice, the Client Solutions Group is a larger part of its business compared to the Infrastructure Solutions Group. Now, over the next year or two, I suspect the Infrastructure Solutions Group will grow to become a larger part of Dell's business because that segment is growing faster than the Client Solutions Group. But the personal computer sales are expected to recover strongly starting in the second half of this year and into 2025 and 2026. As artificial intelligence starts to work its way into personal computers, just as those computers that were purchased during the earlier stages of the pandemic need to be replaced. So Dell is in a good position to benefit on that replacement cycle. Still, that segment of the business is not expected to grow very quickly, even during that replacement cycle, and then especially beyond that replacement cycle. So Dell Technologies is not going to be a fast-growing business in the very near term or over the next 3 years because of that segment weighing down the company's growth prospects. So investors should not look for very rapid growth coming out of Dell Technologies in its upcoming quarter. Dell telling investors that no company is better positioned to bring artificial intelligence to the enterprise. AI-optimized server orders are increasing sequentially up to 2.6 billion, and shipments more than doubled to 1.7 billion, and backlog is growing more than 30% to 3.8 billion. So undoubtedly, the AI server business is growing, and Dell is participating in that growth. That part of the business is doing great, and when it announces earnings on the date mentioned earlier, they're likely to report continued strength in that category, because everything I've seen from the companies that are around that AI server market suggested growth continued robustly in that area, right? That growth has sustained, and that growth is likely to continue going. There's no slowing down in that category at the moment. Now, one of the reasons Dell aims to win here is their AI factory with NVIDIA include the new PowerEdge server, which offers direct liquid cooling in a 4U form factor that can support 72 NVIDIA Blackwell GPUs in a single rack. And this adds 33% more GPU density per node compared to the previous generation model. So the AI server continues developing, and the innovation in this space has been incredible. The research and development that's going into this category has been in the billions and tens of billions of dollars. NVIDIA announced that its new product cycle will be on a 1-year cycle now. So every year, NVIDIA plans to launch newer, more innovative GPUs, and that makes it more attractive for companies to add or replace their traditional servers with AI servers because they're going to be so much more effective. They're going to be at lower cost per unit of computing power. And so this investment, and most of this investment in AI servers right now, is coming from the big companies, the Alphabet, Microsoft, Meta Platforms, Amazon Web Services. Those are the big players in the investment right now. But I wouldn't be surprised if 3, 5, or 7 years in the future, we start to get a broader building out of these AI data centers. I wouldn't be surprised if this broadens out a little bit as the cost of ownership starts to decrease with more innovative technology. I wouldn't be surprised if companies like Walmart might not be interested in having their own AI data server, right? Companies like maybe Netflix that have significant computing requirements and can benefit from the rising effectiveness of artificial intelligence for their recommender systems. Maybe NVIDIA might be a stretch, but, I wouldn't be surprised if Walmart and others with, large-scale enterprises that want to benefit from the rising effectiveness of artificial intelligence and not outsource that. I wouldn't be surprised if they start considering maybe building out their own AI data servers. So Dell's stock price started out the year really well, jumping from $80 per share all the way up over $160 per share. But the recent market turbulence has really brought down Dell's stock price. It's now down back towards $90 per share and is up only about $10 per share since the beginning of the year. And these losses were exacerbated by Supermicro Computer's latest earnings release, which showed the company experiencing lower profit margins. And the company said that they're going to offer lower prices, or they're going to offer competitive prices to gain market share. And that's never a good news for an industry when one of the primary players starts talking about competitive prices to gain market share. And so understandably, Dell's stock price has been under pressure. It's now trading at a forward price to earnings ratio of just 9.779, which is at the lower end of where it's traded at this year, but about above where it traded at before 2024, before Dell started to capitalize on the rising effectiveness of AI. So given Dell's prospects, given the upcoming replacement cycle in personal computers and its participation in the AI data center space, I think Dell stock is an attractive one at current valuations. At these prices and below, around $90 per share, $85 per share, I think investors can feel reasonably good about buying Dell stock at around $85 to $90 per share heading into earnings. And then you can decide whether you want to add more following the company's earnings release. Those topics I discussed in the video are the ones to focus primarily on. And the intangible thing, the discussion that I want you to focus on is if Dell's management says anything about competition in the AI server and lowering prices to gain market share. If Dell says that it's responding to what Supermicro Computer is doing by lowering its own prices, that would be a big risk. That would be an area of caution if I was to hear that from Dell Technologies. So I'm paying close attention to that when Dell holds its conference call following the earnings release. And of course, I'll have an update for you all following Dell's earnings release. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.